Alright everybody, welcome to another YouTube video. This one is a special request, but I wanted to go ahead and make it because I think this question comes up quite a bit. And the question I'm going to talk about today are the pros and cons of 1099 gigs. Now, before I do that, if you like my content, if you're getting a lot of value out of it, there are three things I want you to do. Number one, I want you to like this video. That's easy to do. Share my content with your friends and also subscribe to my channel. Get your friends to subscribe too. You'd be great. So, let's talk. Pros and cons of 1099 gigs. 1099s, for those of you that don't know, refer to contract jobs. Now, those jobs are typically ones where you might work a few months, you can have multiple clients, so on and so forth, but you are not paid a W-2 salary. You might be paid, $5,000 to do this project, or you might be paid, to do like 10 hours of work, preparing tax returns, for example, could be a great one. Like you're just part-time, you go in there, you do, you can show up when you want, all that, and just, prepare returns and you're done. So 1099s typically are not associated with full-time permanent employment. So let's get that out of the way. So I'm going to go through the pros first and then I'll hit up the cons. And obviously if you have any questions, drop them down below in the comments. And these are kind of, I know I'm a CPA, so I'll focus more on tax stuff, but I also kind of want to hit some of these other points because I think they're important for you to consider as to whether or not you should do this type of work. So, first of all, let's talk about these pros. You can grab multiple clients. So the beauty is, like, let's say you're a CPA, you could do 10 hours with one firm, and do tax returns. You could do 10 hours with another firm. You could also take clients on the side as well in your own business. So it allows you that flexibility to use your time how you see fit. You can take multiple clients, and so that could be a great way to grow your business where, hey, maybe I'm not up and running yet, maybe I don't have a full-time, I don't have enough income to do a full-time salary, but I eventually want to open my own business. Well, what you could do is, hey, I'm going to go do some contract work for this person, get a little income going there, and then also while doing that, I can work on building my own business. So you can definitely do that, and that can be a very lucrative way to make, definitely generate some income, and also, again, gives you time to get your business started up and running. So you're not limited to one. Like, whereas if you're a full-time employee, you can only generally work for that full-time employer, and a lot of times they frown upon you starting businesses and stuff on the side. So one point to keep in note, high 401k limits. This is a tax one. Again, for a 401k, as if you work for an employer, what can you do? You can put $19,500 in there as of 2021. It goes up to $20,500 in 2022. But here's the thing: when you do that, you're limited to the employer's plan, and any matching done is done through the employer, so they can match your contributions, so on and so forth. But as the employee, you're limited to $19,500. If you work a 1099 gig, what you can do is open up a solo 401k, and especially this would be great if you don't plan to have any employees, anything working under you. Obviously, if you do, then maybe you want to go the SEP route, but I'm not going to cover that here. But if you're doing it yourself, you can open up a solo 401k. Any broker will do it. And the beauty is you can put up to $58,000 in there. Now, how does that work? Well, again, the first $19,500 of profit that you have, you can put in your solo 401k as an employee. Now, that assumes that you don't have any other job. If you have a W-2 job, you have to factor in any contributions you make there towards that $19,500 limit. But with a solo 401k, you do that, and you can put in, it's based on your profits, you could put in an additional, whatever 58,000 minus 19.5 is, that would be what, 38,000, wait, oh sorry, $38,500. You could put in an additional amount. Now this is based on the calculation of your profits, and it's generally, I think, 20% of your profits after consideration of self-employment taxes. I don't want to get into all the math, but essentially you can put in more than the 19.5. The other thing I like too is you can also pick your plan. You can pick, like, if you like Schwab, if you like TD Ameritrade, you can pick whatever you want and set that up yourself. They're fairly easy to do. The trick I would tell you this is do that definitely before December 31st if you want to contribute this year. Now, the other big thing, the cool thing with being a 1099 employee is you can write off expenses. So you buy a computer, you need to buy one for yourself. If you had to buy one for your employer, you can't write that off, right? You cannot write that off. Sorry, I scratched my head. You can't do any of that. But when you are a 1099 employee and you're doing your own stuff, any related business expense you can write off. So just keep in mind that could be a big boon. Like, so, maybe you're using, you buy a cell phone to use for your stuff. You can write that off. Home office deduction. So you can, if you use a part of your house exclusively for your 1099 side hustle, 1099 gig, you could write some of that off. So the possibilities of deductions open up to you a lot more so than when you're an employee. So this is a huge benefit. I cannot say that enough, to the ability to write off expenses. And again, I don't even want to list them all, but just think about anything you use for your business that has a business purpose that you could write off. Flexibility. Again, like when I did contract work last year, I'll probably do some this year too, for a CPA friend of mine. And the beauty is that you can show up, as long as you're getting the work done that you're supposed to, there's really no set time or anything like that. So just be aware of that could be a nice benefit. And you're also paid on results, not on time. You're not paid to sit there and, they want results. That's why they're hiring a contractor. It's like they're doing it because they need help, they want results. They don't necessarily care if you're sitting your butt in a desk for 8 hours a day. Just, get the work done. And so to me, those are the pros of 1099, self-employment, side hustle, gigs. Let's go to the cons now. Self-employment tax. So when you do Social Security and you're paying into it, the first $142,800 of wages that you earn, if you're working a job, you'll pay 6.2%. That'll come out of your paycheck. The employer pays 6.2%. For Medicare, there's no wage cap, but you will pay 1.45%. The employer pays 1.45%. You don't see what the employer pays. They pay that. You see what comes out of your paycheck, which is half of what the total amount is. When you're self-employed, you get the privilege of paying both sides. And so this is one of the downsides, and that's a big one there, is that you get hit with what they call a self-employment tax, which is basically you having to pay both the employee and the employer side of Social Security. So just something to be aware of, and it's something to be key, and another point that I'm going to bring up here about the taxes. So benefits, there are none. You don't have benefits. You don't have health insurance. You don't have dental insurance. You don't usually get your employer 401k match. Any of that stuff is coming out of your pocket. So how do I approach this? Okay, so how do I approach it? I would look at your benefits now and look at what a typical job offers. Think about it. Think about, like, how much are they paying into your health insurance? How much are they paying into your dental insurance? How much are they paying in for, maybe they have life insurance or disability insurance, or any of these other benefits that you would lose out on. Compare that. I think most employers, I would say 30% additional compensation could be through benefits. It depends. I mean, it could be higher, it could be lower. It just depends on your employer. But it is a key point to know that you have to do that math, because if you're making $30 an hour at a job and your benefits, let's say, are worth $20 an hour more, does it make sense to go do a contract job where you're only making $40 an hour and you have to pay self-employment tax on top of that and stuff? You have to run that math. So it's something to be aware of with the benefits. Benefits are just money at the end of the day. That's you gotta remember. When they say they're gonna pay for health insurance, it is just money at the end of the day. Another point, budget for income taxes. A huge point. When you do this, typically you will have to pay a quarterly estimate. You'll have to pay it to the federal government, and you'll have to pay it to the state government, or maybe even the city government if that applies to you. Now, typically I would say a safe bet would be to take 30% of your profit, and this is assuming that you don't have any other income. But if you're doing that and you're taking 30%, sorry for that, that's what I get for being outside my garage. You take 30% of your profit and budget that for income taxes, I think is a fairly safe bet. Now, obviously, is that perfect? No, but it is something you have to be mindful of. So if you're getting checks and you brought in $100,000 a year, and even after all your expenses, that $100,000 is not all yours. And I think people, when they make that transition, they forget that, because they see that withholding in their paychecks, and they think, when you see your paycheck, what you have there is generally what you get to keep as your net pay. Well, when you're getting the full amount, you forget that that's not all your pay. So you have to be mindful of how to budget for income taxes, and you'll have to pay this every quarter. So just be cautious on that. And like I said, assume 30%, I think, is a great way to start. You can always adjust that if you're in a higher bracket, adjust it up a little bit. If not, adjust it down. But I would just expect 30%, I think, is a good, safe bet. And it's also easier to lose your gig. Like typically, and I've been in places before, where if they bring a contractor in and they have to let go of people, they're gonna do the contractors first. Always. They're always gonna, if that is a concern for you, just know that they will let contractors typically go first. But again, this con kind of plays into this, that if you have multiple clients, then okay, you lose one. And maybe I should bring this up real quick, is a lot of people think that there's security in having a job, but you have to remember that's one person that's paying your bills, one person that you're relying on, one company that you're relying on. If they don't like you for any reason, they can fire you. And the problem is, while it might be a little bit harder to fire you as a full-time employee, they can still do it, and then your sole source of income is gone. Whereas if you have multiple clients, okay, one client leaves, I can go find another client that will fill his slot for the person that let me go. So just remember that sometimes I think we get caught up that the job is secure, but it may not necessarily be secure. I think it's just all about how you view it. So just keep that in mind. But again, I think the key points when you're looking at this is look at what benefits you have with your current job, and make sure that that's reflected in your contract price. Like, in other words, if you're gonna go, if you're making $50 an hour now, and I include that with the benefits, and they're gonna do you could do a contract work and get roughly the same amount of hour, or you can make $100 an hour. That means you have to work half the number of hours now to get the same total pay. Now, obviously, you have to run those numbers, and hopefully you're wanting to make more, so you'll work more hours. But again, this is the whole point, is you're maximizing your value. And when you're doing a job, another point too is the employer is paying you what you're worth. If you're a contractor, you can set your own rate. You can set, now obviously you gotta be competitive, but if you wanna raise your prices, you can. Whereas an employer, it's hard to get a raise. You have to jump through hoops and all that. So another thing to think of, that I did not put on here, but it's another consideration to look at with a 1099 job, or a 1099 gig versus a full-time job. So hopefully this helps. If you have any questions, any additional feedback, any additional pros and cons, drop them below in the comments. And like I said, share these videos with your friends, because I want to get more people learning about finances and learning it through my point of view. I try to be a little different, think out of the box, and so again, spread the word. I'm forever grateful. So you all have a great day. Stay safe, stay out of trouble, and be looking for more YouTube videos coming out.